In this video, I'm going to show you a little bit about what I'm looking at and, of course, ways that you can get these deals funded just like I do. So it's been said, never let a good crisis go to waste. While everyone seems to be focused on rising interest rates and whether or not their single-family housing is going up in their market, experienced investors look at the markets from 30,000 feet and they look at the opportunities that they're presented with in the current day. So what exactly is a crisis? And how is it affecting real estate? We're going to look at 6 things that have changed real estate dramatically. Number 1, affordability. Number 2, lack of supply. Number 3, high interest rates. Number 4, bank problems. Number 5, work from home. Number 6, the changing tides of retail, which a lot of people are calling the Amazon effect. So now let's take a look at some of the issues. In this chart, you're going to see some of the major retailers that have gone bankrupt. This peaked in 2020 and has now settled down. Specifically, some of the big box retailers like Sears, Macy's, and Kmart and Bed Bath & Beyond are gone. But there are thousands more that have not filed bankruptcy that are closing their doors. Another big retail story are the regional malls. In the United States, there are 700 malls left, but the prediction is in the not too distant future, there'll only be 150. This, of course, is because they're getting older, people are shopping online, and the best thing is these are located in the central of many cities. The third thing is, of course, the office market, which has changed dramatically as a result of work from home. As you can see from this chart, the blue line, which is horizontal, represents about 12%. Anything above that line is not breaking even. Anything below that line is making money. Once you stack on the debt plus the operating expenses, most commercial office buildings need to be at least in the mid-80s to break even. This chart represents only 15 of some of the major markets in the United States that are now in trouble. The restaurant business has been severely changed for 2 major reasons. 1, the rise in takeout food has significantly changed the footprint of the needs of the actual restaurant. 2, the rising cost of labor as a result of the low unemployment is now forcing more and more of these restaurants out of business. In just a period of a few years, we've had over 10% of all restaurants close permanently and many more are in trouble. So what does all this mean? What this means is that while some people are watching interest rates, others should be looking at the significant opportunity for change of use for existing real estate that is already in place that's not doing well. On this chart, you're going to see the number of retail locations that have opened and closed since 2019. But what I really want you to focus on, which should be no surprise to anybody, when it says e-commerce. E-commerce has gone from 10% to 15%. Now, while this is only 5%, and many of you might think that's actually low, this represents a 50% increase of people that are actually buying online. And this trend is just beginning, which will force more and more brick and mortar into higher vacancy, therefore creating more opportunity for redevelopment. So why is all this important? It's because undeveloped land can be very hard to come by, especially in already developed areas. The cities and the governments will have to embrace zoning changes and elimination of the parking requirements to repurpose some of these locations to address the community needs. The great thing is that a lot of the governments are addressing these housing issues already, and a lot of the funding is on the way. These are potential future opportunities. There's a great study just put out by enterprisecommunity.org that addresses this problem. This very extensive study goes on to point out that if we just focus on 10% of the strip mall space suited for redevelopment, we could add an additional 700,000 homes. In fact, this is already being done all over the nation, and this is one example of a former store that has now been converted into an apartment building with 73 units for low-income seniors and a 4-story apartment building. As we know, real estate is very localized, so don't miss these opportunities because they will be coming near you soon. 1, we have a housing shortage. 2, we have an affordability problem. And 3, there are no new homes that are being built below 1,400 square feet. Another affordability problem. So hopefully these charts are enough to compel you to understand that this problem is not going away anytime soon. One amazing real estate opportunity would be for you to watch these regional malls as they continue to deteriorate. It's estimated that over 500 malls will be going out of business in the near future. As a real estate investor and a real estate developer, there are going to be numerous opportunities to repurpose these areas for the community needs. And there will be plenty of funding because they will be eyesores in the middle of a city. You can see that the White House themselves have rolled out an affordable housing plan to convert empty office buildings. Guys, I'm here to tell you that this is free money. So for those of you who are upset at the way the government is spending money right now, here's an opportunity for you to put another hat on and take a look at the various opportunities that they have available to you to redevelop some of these areas and meet community need.